This is the moment, the line in the sand, the day you stop just dreaming about financial freedom and start building it. You're here for the secret, the breakthrough, the definitive answer to how you can take control of your financial future, and the world of Forex trading has whispered its potential to you. But let's be honest, the foreign exchange market, the single largest and most liquid financial market on the planet, can look like a maze of terrifying complexity. It feels like a high-stakes casino where only the Wall Street elite or the mathematically gifted ever win. You've seen the horror stories, the wipeouts, the beginners who lost everything in a moment of panic or greed. It's enough to make you freeze, paralyzed by fear. But what if I told you that the game is not about superhuman luck or secret algorithms? What if the difference between the 95% who fail and the 5% who achieve consistent, life-changing success is boiled down to a handful of fundamental principles, simple, yet powerful enough to shift the entire trajectory of your trading career? This isn't just theory. This is the condensed, distilled wisdom of years, and you are about to receive the top 5 Forex trading tips for beginners that they simply cannot afford to miss. In the next 26 to 30 minutes, we are going to tear down the walls of confusion, dismantle the fear, and hand you the blueprint to move from uncertain beginner to disciplined, confident trader. If you've ever felt like freedom was just out of reach, like you were meant for more than the 9 to 5 grind, then pay attention. Because this information right here, this is your chance to change the story. It starts now. The single most critical mindset shift you must make right now is this: trading is not a lottery ticket, and it is certainly not a hobby. It is a full-fledged business. When you treat it like a casual pastime, you will get casual results. When you treat it with the respect, rigor, and planning of a CEO launching a multi-million-dollar venture, you give yourself the foundation for success. Think about the local coffee shop owner. They don't just open the doors one morning and hope for the best. They have a business plan, a budget, a marketing strategy, an inventory management system, and rules for how much they spend on beans versus how much they pay their staff. They understand their risk, how much they can afford to lose before they have to close shop. You, the trader, are the CEO of your own financial firm, and your trading plan is your business plan. Your immediate takeaway is to stop placing random trades based on a fleeting chart pattern or a gut feeling. Instead, you must write out your trading plan. I call this your trading constitution because it's a document you swear allegiance to. It must include your why. Why are you doing this? Is it for travel, to pay off debt, to buy back your time? Write it down. This is your emotional fuel for the hard days. Entry and exit criteria. What specific technical or fundamental conditions must be met before you enter a trade? What is the exact signal to exit, whether in profit or in loss? No ambiguity. Risk tolerance. You must define the maximum percentage of your total capital you will risk on any single trade. Most successful professional traders risk no more than 1–2% of their account balance. Pair focus. You are a beginner. You are not the entire market. Restrict your focus. Pick 1 to 3 major currency pairs, perhaps Euro/USD or GBP/JPY, and commit to mastering only those pairs. You will learn their personality, their rhythms, and the news events that move them. The motivational key here is realizing that discipline is not a restriction. Discipline is the bridge between your goals and your reality. By creating this formal written plan, you are empowering your future self to make rational, calculated decisions, even when the heat of the market is screaming at you to panic. You are installing a logical firewall against the greatest enemy in trading, your own emotional, impulsive brain. If the first lesson is your business plan, then this lesson is your insurance policy, your emergency fund, and your security deposit all rolled into one. I'm talking about risk management, and it is, without question, the difference between a long, profitable career and a flash-in, pan account wipeout. Most beginners focus 99% of their energy on finding the perfect entry, the holy grail signal. They spend all their time on when to get in, and virtually zero time on how much to risk. This is financial suicide. You must internalize this truth. You are not managing profits, you are managing loss. Profits are a byproduct of excellent risk management. Forex trading is the same. Losing streaks are not a failure of your strategy, they are a mathematical certainty of the game. Your actionable step here is twofold: the 1% rule and the mandatory stop loss. The 1% rule: never, under any circumstances, risk more than 1% of your total trading capital on a single trade. If your account has $50,000, your maximum loss on any one trade is $50, no exceptions. This rule is designed to ensure that even a brutal losing streak, say 10 trades in a row, only results in a manageable 10% drawdown, leaving you with 90% of your capital and the emotional stability to keep trading your strategy. This rule is the greatest equalizer in trading. It keeps you in the game. The mandatory stop loss. A stop loss order is your commitment device. It is an instruction to your broker to automatically close your trade if the price moves against you by a predefined amount. Before you hit the buy or sell button, you must know exactly where your stop loss will be placed. Shutterstock Explore. It's not a wish. It's a non-negotiable term of the contract you make with yourself. Your stop loss is the price of the lesson the market is teaching you. By embracing it, you are trading from a position of control, not fear. The motivational power of this lesson is profound. When you master risk management, you transform the market from a terrifying monster into a predictable, measurable game. You eliminate the possibility of a catastrophic loss, and you realize that the most important trade is the next one. By preserving your capital, you are preserving your hope, your confidence, and your ability to trade tomorrow. As a beginner, you will be drowned in a sea of technical analysis tools, moving averages, RSI, MACD, Bollinger Bands, stochastic oscillators. These are not bad tools, but for the beginner, they become a source of confusion, conflicting signals, and paralysis by analysis. You'll find yourself with 5 different indicators on your screen, each giving a different signal, and you'll end up doing nothing or worse, making an impulsive trade against your better judgment. The professionals, the ones who make a living from the market, understand that all these indicators are merely a lagging, slightly delayed mathematical representation of one thing: price action. Price action is the raw, unadulterated truth of the market. It is the story being told in real time by the candlesticks, the lines, and the patterns on your chart. To cut through the noise, you need to simplify your approach dramatically. Focus on what I call the holy trinity of trading: support, resistance, and candlestick patterns. Support and resistance, S/R. These are the key price levels where the market has historically reversed direction. Think of them as the floor support and the ceiling resistance of price movement. When the price hits a strong support level, buyers step in. When it hits resistance, sellers take over. Shutterstock Explore. Your job as a beginner is to simply identify the clearest, most obvious S/R lines on your chart. Don't look for 50 lines, look for the 1 or 2 that jump out at you. Candlestick patterns, these are the language of the market. A single candlestick, or a cluster of 2 or 3, can tell you exactly what buyers and sellers are doing at a key S/R level. Learn the major reversal patterns like the pin bar or the engulfing candle. Don't memorize every single one. Just learn the ones that show a clear rejection of a price level. Your actionable strategy, trade the reaction to the level. Wait for the price to reach one of your clear support or resistance levels. Then, wait for one of your predefined high-probability candlestick patterns to form, confirming the market's intent to reverse or break. You are trading not on a guess, but on a visible, verifiable reaction. The motivational aspect of this lesson is reclaiming your power. You don't need a black box indicator to succeed. The price is telling you everything you need to know, and all you need is the clarity and confidence to read it. By mastering S/R and simple price action, you go from being a student of a complicated system to being a student of the market itself. In the first lesson, we established that trading is a business. In this lesson, we introduce the indispensable tool of every great business, data analysis and review. Imagine a championship sports team that never reviews game tape. Impossible, right? They'd repeat the same mistakes, fail to capitalize on their strengths, and eventually be crushed by competitors who did their homework. Yet, this is exactly what 99% of losing traders do. They close a trade, feel good about a win, feel terrible about a loss, and then immediately jump into the next trade without any pause for reflection. This is a failure of self-awareness. It's an inability to learn from experience, and it is a guaranteed route to mediocrity. You must start a trading journal today. This is not just a ledger of profit and loss. This is your personal laboratory, your confessional, and your most valuable educational asset. For every single trade you take, you must record the following: the setup, a screenshot of the chart before you entered the trade, clearly marking your S/R lines and entry signal. The rule, a brief note stating exactly which of your trading plan rules justified the entry. Did you wait for the pin bar at support? Yes/no, the feeling. This is the most crucial part. Write down your emotional state before, during, and after the trade. Were you fearful, greedy, bored, excited? Did you move your stop loss because of anxiety? Be brutally honest with yourself. This reveals your psychological weak points. The review, a screenshot of the chart after the trade closed, with a written analysis of what you did right, what you did wrong, and what you will do differently next time. Commit to reviewing your last 10-20 trades every single weekend. When you review, you will inevitably discover patterns in your behavior, not just in the market. You will see that your losses weren't due to a bad strategy. They were due to you breaking your own rules, moving your stop, revenge trading after a loss, or entering too late due to fear of missing out. The motivational truth here is that you can stop feeling like a victim of the market. The journal gives you ownership of your results. It transforms every loss from a painful failure into a quantifiable data point, a specific lesson that moves you one step closer to consistent profitability. The market is constant, but your evolution as a trader must be continuous. The journal is the engine of that evolution. We've covered the business plan, the risk management, the core analysis, and the review process. Now we arrive at the culmination, the mindset of a statistical edge player. This is the difference between a gambler and a professional. A gambler hopes to win every hand. A professional trader understands that their strategy, their edge, does not guarantee a win on any single trade. It only guarantees a positive outcome over a large sample size of trades. Let's imagine you have a trading strategy that is right only 60% of the time. That's a fantastic edge, but you must prepare for the 40% of the time you will be wrong. If you take 100 trades, you should expect to lose about 40 of them. Crucially, those 40 losses won't be perfectly spread out. You might have a losing streak of 4 or 5 trades in a row, which will test your emotional and financial resolve. The beginner, after 4 losses, abandons the strategy, thinking it's broken. The professional knows that the 5th trade is just as likely to be a winner as the 1st, and the 6th, and the 10th. They understand that the only way to realize their statistical edge is through patience and consistency. Your immediate task is to stop judging your trading performance on a trade-by-trade basis and start judging it in sets of 100 trades. Define your edge. Backtest your simple price action strategy on your chosen 1-3 pairs. Determine your win rate, e.g. 55%, and your average risk-to-reward ratio, e.g. 1:2, meaning you aim to make $2 for every $1 you risk. Execute without emotion. Once you know your win rate in R, you have a verified positive mathematical expectation. Your job is now simply to execute the strategy 100 times, treating each trade like an insignificant, identical unit. The outcome of any single trade is random. The outcome of the set of 100 is almost guaranteed to align with your statistical edge. Embrace the loss. When you take a loss that fits your plan, meaning you followed all your rules, you should feel no negative emotion. You simply paid the small, predefined cost to gather more data for your 100 trade sample. A loss is just a statistical event necessary for the next win to occur. The motivational takeaway here is the ultimate realization of freedom from the fear of failure. You are no longer praying for a lucky win. You are simply managing a proven statistical process. You become an execution machine, cold, logical, and unburdened by emotion. This gives you the mental fortitude to stick to your guns during the inevitable losing streaks, which is exactly where 95% of traders crumble. You gain the master's edge, the ability to be consistently logical in an emotional environment. We started this journey asking for the definitive breakthrough, the secrets to success in the massive, complex world of Forex trading. And what did we discover? The breakthrough isn't a secret indicator. It's not some hidden market manipulation only accessible to the elite. The breakthrough is you. You are the variable that must be mastered. The market will always be the market, chaotic, cyclical, and unforgiving. But you have been given the tools today to manage yourself within it. We talked about the blueprint of discipline, treating your trading like a professional business by creating a formal trading constitution. We secured your foundation with the unbreakable shield of risk management, teaching you the sacred 1% rule to guarantee you stay in the game. We sharpened your vision with the lens of clarity, showing you how to focus on the raw truth of price action, support, and resistance, cutting through the confusion of endless indicators. We introduced the path to mastery, the non-negotiable power of the trading journal, to ensure every mistake is transformed into a lesson, accelerating your growth exponentially. And finally, we gave you the master's edge, the mindset to think statistically, detaching from the emotional roller coaster of individual trades and focusing on the long-term profitable set of 100. Your journey will not be without challenges. There will be days of frustration. There will be trades where the market seems to move against you purely out of spite. But in those moments, I want you to remember this voice and remember the constitution you wrote. Remember your 1% rule, your shield. Do not deviate, do not get greedy, do not let fear or anger dictate your next move. The ability to control your capital, and more importantly, to control your mind, is the only true power you have in this market. Now, the information is no longer yours, it is simply information. The power is not in the knowing, but in the doing. The time for research is over. The time for dreaming is over. The time for analysis paralysis is over. The journey to financial sovereignty begins with one single, disciplined action. Take a deep breath. Reread your trading plan, load up your charts, and go execute your first trade, not with the hope of a gambler, but with the measured, calm, and unwavering conviction of a statistical edge player. You have the knowledge. You have the blueprint. Go out there and build the life you deserve.